Okay, we're with our guest and my friend and Cheddar friend, David Cowen, President and CEO, Museum of American Finance.
Thanks. It's always great to be back.
And my neighbor, too.
And your neighbor, right? And it's always awesome to be back with Cheddar. And we partnered before.
And back we are.
Back we are, no
question. Okay, we're going to do the second version of the series that we did together, half a year ago, whatever we did.
They were one a month. They started about a year ago. It came out of our Communications Executives Advisory Panel. That's some 40 C-suite comms specialists. And they came up with an idea that we should be talking with the senior leadership, the heads of financial institutions, on a simple question: why does Wall Street matter? And not just on a public level or your business level, but what about a personal level?
And the variant this time is disruption. Is why does Wall Street matter, and why does disruption matter to Wall Street, correct?
Absolutely. So now we're going to do phase 2 of that,
yes,
which is with chief technology officers, chief digital officers, chief information officers, and my favorite, chief innovation officers. And some of these individuals run 10,000 technologists as we are disrupting Wall Street like never before.
We have Fitch Solutions, Broadridge Financial, Protiviti,
yep,
Citi, TIAA, Common Bond, New York Life, JP Morgan Chase. Are these technology companies now?
Oh, in many aspects they are, and they're leading edge technology companies. I happen to be at one of those major banks, and you see thousands of its technologists at work, and they're thinking about the entire spectrum of customer experience as well as speed of information flow. And what's interesting is a history museum, when you look at that, you look at the floor of the exchange, you look at old tickers and that information. This started 30 odd years ago when Alexander Hamilton created our financial system. There would be speed express coaches and horses racing between Philly and New York, and it's well identified in the newspapers, about information flow to get arbitrage going. So technology, as old as the hill, as old as our capital markets, and we're going to talk about recent disruption in that.
And it seems what drove them, when I talk to people from incumbent large financial institutions like this, it was the startups. It was Robinhood, it was blockchain, it was wealth front betterment. That's really what sort of like poked these state institutions to get a move on it. Fair enough?
Really, fair enough. An interesting point, too. And by the way, when you say blockchain, 10 years ago, no one heard that phrase. 5 years ago, you couldn't go to any conversation on the street without hearing that, hearing that right away. There is a lot of disruption going on, but there's also democratizing of finance and lots of big companies out there that are trying to achieve that, whether it be PayPal, Venmo, but there's so much action happening with this. It is really timely for us to partner again, and we'll do it in 2 segments. First, there's the video,
yes,
and then your team, your team is going to interview these individuals live, and that's the really exciting part as well.
Okay, well, I'll do some of them, but I have to be disrupting media, so I don't get to do all the finance interviews. When I love, every time I go to the museum for an event, I love looking back at the old tickers. I do love the old tickers. I have lots of pictures of them. If you had to kind of rattle off, let's say past 25 years, what would be some of the biggest disruptions? Would it be decimalization? Would it be electronic trading? What would be a few that would come to mind for you?
The first one is speed that comes to mind, and what's going on with high frequency trading is staggering when you look at the speed of transaction. And also the processing, what I call the plumbing of Wall Street, is so amazing now. When you know about the back office crisis, it's almost shut down Wall Street in late 60s, early 70s, and now the volumes that we are pressing through is simply staggering. There's the other side of that coin, though. Former Fed Chair Paul Volcker said there's been no good innovation since the ATM. So there's always 2 sides of a coin of disruptive technology, but we are moving forward at a fascinating time for the street, and looking forward to this partnership.
And from your standpoint, what do you think the biggest consequences have been in terms of economic policy or transformation to the economy as a result of these disruptions?
I would say it's more enabling an individual. For instance, look at brokerage rates that have come down over the years. You can execute now for a few dollars per share, whereas 30, 40 years ago, that was very different. Or you can use robo-investing, which is a big part now of the street. There is so much happening that enables an individual investor now. That's an exciting moment.
Well, there is a tremendous democratization. I think about it that when I was in, I think 8th or 9th grade, we had the New York Post used to do a stock picking contest, okay? We used to have to get the quotes the next day.
Right.
When I was like 11 or 12 years old, right? And now to think to the fact that everybody in this country can get a stock quote from Apple stocks or Yahoo Finance or MarketWatch or the like. I mean, it's pretty. Even in my lifetime, it's pretty revolutionary.
Yeah, what it says now on your phone, right?
Right.
We're executing trades, and what you were doing in 8th grade, that had been around for a couple hundred years that you were checking. It was like the baseball scores or
right.
The football scores. You'd have to wait to the next morning, and now everything is coming instantaneous. And Cheddar, quite frankly, is on the cutting edge of that revolution, right?
Well, we try. All right. Well, look, we're very excited about the series, and we're very excited to a big year with the museum. So, David, thank you for doing this kickoff with me, and we look forward to these 9 or 10 amazing interviews we're going to do over the next couple months.
As always, John.
Pleasure. Thank you for joining today. To be
Thanks.
continued. Back to you guys.